A meme coin on Wall Street, that's not a joke. On April 9th, Canary Capital filed official paperwork with the SEC to launch a spot Pepe ETF, an exchange-traded fund for a frog meme token. And whether you think that's genius or insane, it tells us something important about where crypto is heading. Let me break this down in this video. So here's what actually happened. Canary Capital submitted what's called an S1 form to the SEC. That's a standard registration document required before any new security can be offered to the public in the US. The filing is for a spot Pepe ETF, meaning the fund would hold actual Pepe tokens, not futures contract. A regulated custodian stores the tokens. Shares would be created and redeemed in baskets of 10,000 units, and here's an interesting detail. The fund would also hold up 5% of its assets in Ether, not as an investment, purely to cover Ethereum gas fees. Now, if you're wondering why this is a big deal, let me put it into context. An ETF, an exchange-traded fund, lets you buy exposure to an asset through a normal brokerage account. No wallet, no seed phrase, no decentralized exchange. You just buy it like a stock. We've already seen this play out with Bitcoin and Ethereum. Their spot ETFs open the door for institutional money to flow into crypto through regulated channels. Now Canary Capital is trying to do the same thing, but with a meme coin. That's a fundamentally different proposition. Also, this isn't a one-off. Canary has been filing for crypto ETFs across the board. They've already submitted applications for Solana, XRP, Hedera, Sai, even memecoin. The Pepe filing fits into a broader strategy of targeting what you might call the high beta segment of crypto. Assets with high volatility and large community-driven trading volume. They're essentially betting that there's investor demand for regulated exposure of these assets, and they want to be the first to offer it. But here's the reality check. The SEC has historically required two things before approving a spot crypto ETF. Evidence that the market is resistant to manipulation, and a regulated market of significant size, typically a futures market on something like the CME. Pepe doesn't have that. It trades on crypto exchanges with high volume, but there's no regulated futures market for it. On top of that, Canary's own filing flags a concentration risk. The 10 largest Pepe wallets hold roughly 41% of the total supply. That's a metric regulators pay close attention to when evaluating market integrity. And for context, the Dogecoin ETF is already live in the US, but its performance has been modest. Total net inflows across the three Dogecoin ETFs combined sits around 7.6 million. That's not exactly a flood of institutional demand. Whether or not this specific ETF gets approved isn't really the point. What matters is the signal. The fact that a regulated asset manager is filing SEC paperwork for a meme coin tells you something about how fast the line between internet culture and institutional finance is blurring. 2 years ago, this would have been unthinkable. Today, it's a regulatory filing sitting on the SEC's desk. That's the breakdown. If you want the full deep dive, the article is linked below on Crypto Ticker. Make sure to subscribe. We break down the news that actually matter in crypto. See you again in the next one, and thank you so much for watching.